call this section get out. It's called get out. So I can enter and I have to get out. That's the secret to day trading. So here's the scenario here, okay? What happens is right here, generally speaking, when I'm moving up, when the market does this and it dwindles a little bit, it'll either go up, or what it will do is it'll either go up, dwindle, and that's it. Or what it's going to do is it's going to go up, dwindle, and boom, right down, okay? So in these two cases, I don't lose. But in this case, I lose, okay? So now what I need to do is to, first of all, there are two types of exiting. One of them is with profit, with loss. Let's focus on the loss. Okay, I've seen this so many times over the past 4 years with thousands of trades, and these ones or twos or threes that just totally annihilates my account, which means that I have to get a handle on the situation in order to move forward. Otherwise, it's like climbing a sand hill, a hill made of sand, loose sand, right? The more I go, the more sand caves in and just retraces my steps all the way down to where I started. And it starts bearing, right? So what I need to look at is initially I can fine tune the dwindle sideways so that I can even add more, I suppose, when something like that occurs. But here I can say, well, if it's going sideways, just exit and trade something else, kind of thing, right? So I can do that. But here, what I need to do is exit as fast as possible so that I can preserve the previous trades that made gains. Okay, so now I need to look at something called the dwindle reversal. That's how I lose. And if I'm going to lose, I'm going to lose small, right? That's the idea. So when this happens, then I need to critically analyze what's really going on. So I have to critically think about it so that my subconscious is aware of what my logical side is doing. When my logical side and the subconscious side is disconnected, it is essentially disconnected. There's no continuation between the subconscious and the logical side, where the subconscious side wants to do the right thing, but it cannot do the right thing because it does not have the connection to the logical side and the formulation that the logical side has created to make it a consistent and conscious subconscious thing that I do, right? So after 4 years of working as a dishwasher and doing prep work for a fast food restaurant, there are certain things that I do on a routine basis that vastly is essentially, sometimes what I do is I go in and I get out. I clock in and clock out after a certain amount of time. What happens in between is such an automatic thing that I don't even think about it. And when I power the dishwasher off, it normally is powered off because I never forget, because it is part of the subconscious, because I've done it and I made it as a routine. So what I need to do is connect between the subconscious and the logical side, link. So how do I do that? Now I do that by analyzing what this is. What is this mechanism? And what it will do. So what it will do is surely it's going to do this, and it's going to go like that, or like that, or like that, or like that, like that, and then boom, that's what it's going to do. So I have to say to myself, okay, I have to say to myself, when it reaches a certain loss, regardless of whatever happens, whether it moves back up or moves sideways, I have to exit to preserve, to limit the possibility of, and essentially, like the psychologist did when apparently he was in a hostage situation and he was pulled in by the military, and this hostage negotiation was proceeding. And when the hostage negotiation was proceeding, the military personnel who was in charge of the whole situation informed the psychologist stating, "You are here to steer the negotiations in a positive direction, and we are here to ensure whatever possibility that occurs is fully encased, and whatever happens, we will be able to deal with it, whatever happens." That's what it means. So what that means is that when I draw this line, this is a line right here. This is a line. This is a critical line, and I cannot cross that line. Because when I cross that line, anything can happen. Anything, essentially, it could, in a lot of the cases, what it will do is it'll come back down and then it just come back up. That's all it would do, right? That's all it would do. But what I want to ensure is that whatever happens, I cannot cross that line, and I have to exit that trade, whatever happens, okay? Because what will happen is that it'll fluctuate and it'll drop, and then it'll do this, and the loss will be so significant, and the emotional turmoil will get exponentially increases. The emotional so this emotional duress will increase logarithmically. Right here, as this moves, and when I'm holding on to it, it causes severe amount of emotional distress, and that's why it needs to be stopped out right there. Okay, because it could be this, it could be this, it could be this, but it'll just drop right there. Sometimes what it will do, in many of the cases, essentially what it would do is it'll go up, okay, and sometimes what it would do is essentially after here it'll go up, okay. It's possible right here it'll dip a little bit right beyond where my stop loss is, and then it'll just keep going up, okay. That's possible, but in order to protect myself to here, I need to preserve my emotional capital as well as my trading capital, and I need to exit as quickly as soon as possible, and that's the idea that I have. One more thing that I've seen is that apparently these huge banks, what they would do is they want liquidity. And how do they gain liquidity? Apparently, they create liquidity based on the idea of the liquidity pool. that they have. So if in particular, if something goes up like that and establishes it like this and like that and like this, that means essentially there are two regions of liquidity, which is here and here, right there. These are the two ranges. And apparently what the banks will do is that they establish this, and what they'll do is they'll insert a candle that will go just right here, and they'll insert another candle right here, and that they'll insert another candle right here, and another candle right here. And usually these are the wicks. What that means is because this is a region of liquidity, many have their buy and sell regions here. That's where liquidity is. But in these regions, there are very few volume. Volume is made here. Volume is slow here, unless there's a serious escalation by the bank. Apparently, that's how one of the videos describes it. Okay, so in order for the banks to control their selling pressure and a buying pressure, they have to disguise it in a manner where it is trading in the zone where there's high liquidity, either buying or selling, right? And so when they essentially break down and go through these liquidity zones, it's possible after it enters this region, it could just essentially what that could possibly mean is that it could mean a drastic drop like that. So you got this whole selling pressure right here, big selling as it goes beyond the liquidity zone. It's going to mop up all the buy and sell orders right here. That's the idea. So what I need to do is before that occurs, what I need to do is exit when my thesis is incorrect as soon as possible, right here, right there. This is the zone that I need to enter, and then if it does not, it does not prevail in the direction of my thesis, then I need to exit the trade as soon as possible. Because what tends to happen is that, just like that previous video, I'm essentially doing a 160 loss right here when I get to this point. And then finally, my emotional capital just snaps, and I have to exit the trade before even more emotional trauma, right? That's what happens. So that means at a certain point when I gauge, so that means I have to understand what I'm willing to lose when I enter a trade. And I've heard of this before on various YouTube channels that states that once your mind is set initially before you enter the trade to think in terms of how much am I willing to lose, then what I'm doing is I'm essentially preserving my emotional capital to the fullest extent, because it has already been decided what I'm going to do. Instead of causing the emotional trauma to boil over and escalate when there's a soft stop. And soft stops can be easily negated by the subconscious when the subconscious takes hold over the steering wheel and drives the trade. And usually that does not fold well, because the vision is diminished. Whatever's happening, the hope starts to kick in, and when it goes further away from my price target, the hope increases even more, until finally at a point where the emotional capital has been expended, such that the such that the emotional part of me snaps and says, okay, this is where I need to get out. Otherwise, or I just say, oh, well, it's too late. It's one of those two things. Or in this case, what I need to do is make sure that I exit the trade as soon as possible. Just get out of the trade. This famous, she's a swing trader, and she says apparently these moving averages performs a crossover. Apparently it's called a death cross. And when she sees that, she needs to exit the trade as soon as possible. Her exact words were, get the F out. I think that's what she said, right? Because when that occurs, there will be such a dramatic move, the account will be either blown up or it will be severely handicapped. Because what happens is when a trade occurs is if I'm trading thinking, okay, so the math is this. I mean, if my mind is thinking that I'm going to make 200 on a trade, then I'm willing to, it's possible that the loss could be 200 as well, because it could move that much within a blink of an eye. Okay, and so when I calculate it, I need to make sure that I preserve what I'm doing, that preserve the trade and preserve my capital by limiting this to, if I'm attempting to make 100 to 200, then reasonably speaking, I can be satisfied with losing 50 on these trades. Okay, that's the idea that I have, and because I'm scalping, the statistical probability of win-to-loss ratio is higher. Okay, so if I can manage to make that into maybe 75%, okay, when I want with this win-to-loss ratio, then this is a perfect formula for a consistent consistency. That is consistency right here. And so when I hear this, like, get out, that's not good to hear, but in trading, it's a good thing. You want to get out. You want to get out as soon as possible. Get the heck out. Get the heck out of that trade as soon as possible. Okay, that's the dwindle reversal side. Now, how do I handle the how do I handle the continuation? That is something that I need to consider as well. So I suppose what needs to happen is, in a similar line, it applies the same way. Okay, dwindle, continue. So what that means is, this is very similar to what this is. Okay, so that means that essentially what has already occurred is the entry occurred here. Then it had moved up. Now it's dwindling. And then it has a possibility of continuing. Okay? So what that means is this. I have to establish a point of critical line here as well. This is the critical line right here. Okay? What I'm saying to myself is that, okay, it made this gain, but if it reaches below here, I need to get out of that trade. That's what I need to say, because it repeats exactly what it is from the entry point of dwindle reversal. It has to be the same as dwindle continue. Okay, that's what it means. Essentially, that's what it means. And so if I were to add to this trade, then I would have to have a certain critical component here, right here, at this point. This is I have to think this way in order to trade well, because I have to think it out first before I trade it. When I'm trading, my subconscious is unaware of my logical side and what the logical side wants to do. And my logical side is blaming my subconscious, saying, why did you not do something that I really didn't fully display on this trading plan? Okay. And the subconscious saying, duh, that's why, right? That is why. Even though my mind has a foggy idea of this trading concept, it has not fully detailed the way that I need to trade, and that is why when I'm in the heat of trading, the subconscious is unaware of what it needs to do, right? And so now that I have elaborated on this, so dwindle reversal is very similar to the dwindle continue. So this is where I can either add or just hold. Okay, that's how it works. And this is going to continue a little bit above here. Right here, it's going to continue. It's going to do the same thing, just like that. And that is why. That is why. Uh, that is why when a uh, security is moving down, pulls back, moving down, pulls back, moving down, pulls back, moving down. Okay. Sometimes these are very shallow, such that it is essentially a parabolic move. But in this case, there's going to be a pullback, and I have to be satisfied with a certain amount of pullback. But if this is deep enough, then I need to exit. Okay? If so, I need to be aware of 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 situations here like this, right here. Okay? Right there. Okay? So that means that if it reaches here, I need to exit the trade. Okay? And then here, I suppose when I look at that, then uh, so I can look at it as an exit here, and here is a point where um, so I need to remove that. So essentially, that's where the point is right here. I need to exit after it gets to this point, and when this line is breached, I need to exit the trade. That's it. That's how it works. Yeah, it's the same thing. So this repeats here, whether it's going to be a continuation, and how broad this channel is from where the pullback starts to the point where I consider this trade to be null and void is a point where if it meets the certain my conditions in my trade to the loss scenario, then it'll continue on this trade. Otherwise, what we'll do is it'll exit the trade, and then I have to figure out some means to enter the trade, right? That's basically it. So what did I get? So now to recap what needs to occur. There's still 4 more days of trading for this week now. So what that means is, if I look at this here, so to recap, okay. So this is the 3 conditions: dwindle continue, dwindle sideways, and dwindle reversal. So this is a dwindle reversal, which means that what it will do is it'll get to a certain point of resistance. That is going to be a resistance area. It resists. That means that the momentum has momentarily ceased going up. And there is in this case, with the dwindle reversal, what it will do is it'll cease and then it'll start the momentum in the opposite direction. And that can be a very, very costly situation if I do not exit in a timely manner. So I've established with the risk size that I have, I'm going to be comfortable with the 10K platform challenge of 50. Okay, when that is reached, then it's going to be a hard rule that I cannot break, and that must occur every time. Even if in most cases, and that should also be able to be a to allow smaller pullbacks to be absorbed by it. But if it goes beyond it, then I'm saying to myself, okay, when it goes past this point, then holding on to it can be detrimental because the risk is too great. And so the same thing that I can do here is that when I look at this situation and when it dwindles a little bit and it goes up, then I have an opportunity to add. And every moment that the candle is painted, then I have to ask myself, is it dwindling? Is it dwindling? Is it dwindling? Okay? Because when it dwindles, it is a point where a decision is being made. It's like that candle. It's like this candle right here, right? Here's a candle right there. Okay, this is a candle right there. That candle is a decision candle. It's asking, what should I do? Because the market is unsure of what to do, and so that's why it's in a state of sideways motion. That's what it is. For a 1 minute candle, in this case, that means that it had entered at a point close to where it closed. It means that in between something happened, but it was indecisive. So when it closed, it is essentially the same thing. And so whatever happened within that 1 minute, the catalyst that impacted it is stagnant. Okay? That's what it means. And so when I look at this, this is right here, this is right here to decide what's going to happen next. So now this is an approach that I will use to make the trades to finish out this week's. Now the hard part, you know what the hard part is? Following the rule.